YouTube, it's Louis here. I hope you're all well. We're diving into Quant today on the weekly time frame. We do see the weekly candle has actually closed below 146. So we're trapped between the 382, which is our neckline of the double bottom, and well, we can just call it 130, and $146. This is our resistance on the weekly time frame. So for us to get continuation, whether it's downwards or upwards, we need to break through those two levels, 130 and 146. But of course, for us having to wait till the end of the week, we could be up here, for example. We could be down here, for example. So we need to actually look at the lower time frames for further clues as to where this is actually going within the week, basically. So yeah, our support is 130, our resistance is 145. We'll go to the daily time frame now, but as we can see, it's not really a clearer picture, is it? We got rejected off the 0.5 with a bearish engulfing, taking us back down to here and flipping back up. We were speaking about the potential lower high over here. Be careful of a lower high just in case it's a B, C. But if this is bullish, we need to break above that wick, and only once we're above that wick, we're continuing up to $160. And of course, with no closes above there, we're not going up. So even on the daily time frame, it's not really clear. Let's go scale down to the 4 hour. When I mean it's not really clear, the only thing that we've got from so far from the weekly and the daily is that this is support and that is resistance, and the daily didn't really help us either. Just that the 20 daily EMA is lining up with the neckline of the double bottom, so technically we shouldn't fall back under the double bottom. That's what the 20 daily EMA is saying. It should be acting as support, so even if we come down to it, it should be support, which is, in other words, the bottom. Hope you guys are enjoying today's update so far, so do smash the like button, comment and subscribe. Let's go over to the 4 hour time frame to look at this a bit clearer. So of course, after breaking out of the neckline, we respected its support, and it looks like we were trying to break out and make that higher high, which we were just discussing on that daily time frame. But as we zoom in, we can see we're yet to break above, and I'm going to pull out the fibs. Just before doing so, we can see that there have been multiple attempts of closing under the 20 to head to the 55, which we call our double brick wall. So in keeping above this, we should not go lower and not revisit. We should not revisit 130 as long as on the 4 hour time frame we do remain above this wick, $136. So as long as we can do that, we're not going back to that weekly range low, which was also the double bottom neckline. So if we want to take out this high, let's look at a good few levels. But what were the moving averages saying? Hold above this to go up. Also looking at the high, we're not continuing up until we break above this level, 147.58. Now using the fibs from this top over here to this low, got the golden pocket, which is not lining up nicely with that 55 moving average on the 4 hour time frame. So this is our support. We should hold this as support as we have created the reversal wave. So by even being up here, it's not what should have happened. So this is why I was warning you guys of that potential dead cat bounce or ABC correction. So remember, if we go back to the daily time frame, you would have remembered after this big red candle, we were saying we're going to try and test it again. Let's see if we close below or above. Even if we close above, there's that risk from here we could go back down and it'd be an A, B, C. And on the lower time frames, as like the 4 hour, that's over here. So from here, we should have, well, not should have, but if we're looking at the rules of the Fibonacci's, that is what should have happened. It doesn't have to, and even if it doesn't happen, that's fine, because we know the other scenarios that can play out, because we always prepare for them. So what should happen is a big push down, you exhaust into your golden pocket, and this is usually the perfect area to look for shorts, essentially. So from here, we should be looking for shorts, and we should take out this low. That was not the case, of course, but this is what should be happening with your fibs. You push, you exhaust into the golden pocket, and you continue, and you break the low in this case. Or it could have been the opposite way up, the way around. Just flip it, push, exhaust, and continue upwards. Do you get that? So should have lost this. That was not the case. We're trying to find anything that shows invalidation. So invalidation of going below this is a higher low. So we could have formed a higher low here to go up again, or just simply take out the golden pocket. So what we need to do is get above the golden pocket to invalidate this part. So if we don't want to go lower than this and go to new lows, we need to now create the reversal wave. It's not what should happen, guys. Remember, this is what should happen. But just because this is what should happen, it doesn't mean every single time we look at the fibs, this is going to happen. No, that's wrong. But this is the expectation. Yes, we're expecting that until proven otherwise. So if we do get a pump above the golden pocket and we do hold it as support, that's the reversal wave being created, as it's not meant to happen. This is a retracement tool. So after a big push down, it's telling me I'm retracing here, and after I've retraced here, let's continue down. So it becomes a reversal wave tool once you break through the golden pocket and confirm it as support. So that's why going forward, we can't lose that wick. Also the 55 moving average, also the 0.5 fib level. So everything's saying don't lose this area. As long as we're above this area over here, chances are we're going to go back to the 1 fib level. As long as we are remaining above this, we should go up higher to our next targets, which is why well, in the chat at least, I was talking about $160. If you want to be part of the chat where there's over 60 people talking every day, helping each other out, where I put my past trades so you guys can learn off anything, any more details, any more exclusive videos, they're all in there, and you get my chat included with the course or the mentorship. Now, if you want to message me about those, then hit the link underneath this video to take you to my Twitter, where you can, of course, message me for a discount. But yeah, other than that, again, not much more to say. Remain above this golden pocket for the rest of the week, and we should get this continuation up towards $150 and $160. Thank you guys so much for tuning in. Please do like, subscribe, and comment, and I'll catch you in the next one. Peace.